Good evening. Tonight, we bring you a story that's sending shockwaves through the heart of the global economy. We begin with breaking news shaking global financial markets as investors and analysts scramble to make sense of a dramatic turn of events. In Tokyo, Japan has just completed a massive government bond auction, directly defying warnings from President Donald Trump and challenging the expectations of financial experts worldwide. This was no routine transaction. It was a high-stakes economic showdown with billions at risk and the eyes of the world fixed on every move. The Japanese Ministry of Finance announced the results of its 10-year bond auction, worth over 3 trillion yen, about $22 billion. The sheer scale of this auction is enough to make even seasoned investors take notice. Normally, this would barely make headlines, lost among the daily churn of financial news. But with weeks of criticism from the White House and mounting international scrutiny, the world was watching closely, waiting to see how Japan would respond. President Trump accused Japan of deliberately weakening the yen and warned of a looming financial crisis, raising tensions between the two economic giants. Tonight, Japan responded, not with words, but with the language of money, sending a clear signal to both critics and supporters. The auction became a test of global confidence. Would investors heed Trump's warnings, or would they place their trust in Japan's stability and long-term economic strength? The result? Analysts are stunned. The demand for Japanese bonds far exceeded expectations, defying the predictions of many experts. The message is clear. Japan's economy is more resilient than critics claim, and global investors are still betting big on its future, showing renewed confidence in the country's financial leadership. This is more than a successful bond sale. It's a declaration of economic independence, a bold move with major implications for US-Japan relations and the balance of power in international finance. The yen has surged, markets are reacting in real time, and experts worldwide are scrambling to adjust their forecasts as the ripple effects spread across continents. Over the next hour, we'll break down what happened, why it matters, and what it means for you and the world. Stay with us as we unpack the full story behind Tokyo's trillion-yen gambit. To understand Tokyo's move, we need to revisit President Trump's recent campaign against Japan. Over the past month, he's accused Japan of currency manipulation and keeping the yen weak to boost exports, hurting American workers. He's also questioned Japan's massive national debt, warning that investors would soon abandon the country. These statements set a tense stage for today's bond auction, with many expecting investors to be spooked. The auction became a referendum. Would the world trust Trump's warnings or Japan's financial stability? The answer, delivered today, has thrown the president's narrative into question. For those unfamiliar, a government bond auction is how countries borrow money from investors around the world. It's a process that happens regularly, quietly powering the financial engines of nations both large and small. This borrowing becomes necessary when a government's spending exceeds the revenue it collects from taxes and other sources, creating a budget deficit that must be filled. Investors step in to buy these bonds, essentially lending their money to the government, with the promise of being repaid in the future, plus interest. It's a deal built on trust and expectation. When demand for these bonds is high, it signals that investors see the country as a safe and stable bet. This allows the government to borrow at lower interest rates, saving billions over time. But when demand drops, it's a warning sign. The government must offer higher interest payments to attract buyers, hinting at deeper financial troubles or shaken confidence. In this way, bond auctions act as a real-time report card on a nation's economic health, instantly reflecting global sentiment and trust. Today's Japanese bond auction was under a global microscope, drawing intense scrutiny after Trump's warnings about Japan's economy and financial stability. Many experts and analysts predicted weak demand, expecting Japan would be forced to pay more to borrow, and that confidence in its economy was wavering. But this auction was about more than just money. It was a global vote of confidence, a battle of perception between political rhetoric and economic reality. The world wondered, would investors side with the White House's warnings, or would they trust in Japan's economic fundamentals and stability? As the auction results came in, the world watched closely, knowing the outcome could shift markets and shape opinions. In the end, the outcome would speak louder than any political statement, sending a powerful message to investors and governments everywhere. As the auction deadline neared, tension gripped trading floors across Asia. The key metric, the bid-to-cover ratio, measuring demand for the bonds. Experts, influenced by U.S. pressure, expected a weak result, around 2.5, signaling waning confidence. A low ratio would mean higher borrowing costs for Japan and a political win for Trump. The world waited, eyes glued to screens, for a single number that would reveal whether Japan's credibility had been shaken or if it would defy expectations. The answer was moments away. The results stunned everyone. The bid-to-cover ratio soared to 4.8, nearly $5 in offers for every dollar of bonds sold. This was a landslide vote of confidence, completely rejecting Trump's narrative. Demand was almost double the most optimistic forecasts. Investors ignored political noise and chose Japan as a safe haven. The auction drove interest rates to historic lows, making Japan's debt easier to manage. Instead of a crisis, Japan received a massive endorsement from global markets. The financial world called the president's bluff, focusing on Japan's stability and strong fundamentals. The auction became a symbol of resilience, showing Japan's economy remains a pillar of stability. The shockwaves from this result were just beginning. The world had its answer. Market reactions were immediate and dramatic. The yen surged against the US dollar as investors rushed to buy, signaling faith in Japan's strength. The Nikkei stock index initially dipped. Stronger yen hurts exporters, but quickly stabilized as confidence returned. Japanese banks and financial stocks soared, buoyed by the auction's success. By day's end, the market had absorbed the shock, closing only slightly lower. The ripple effects spread globally, with Wall Street and European markets reacting to the news. For the US, it was a setback for Trump's economic agenda. The strong yen complicates his trade narrative and may embolden other nations to resist US pressure. Investors worldwide had spoken, reshaping markets from Tokyo to New York. The verdict: Japan's stability matters more than political threats. The financial world was recalibrating in real time. The message was clear. Financial analysts worldwide expressed astonishment as the news broke, with many struggling to process the scale and speed of the market's reaction. A senior strategist in New York said, "Nobody saw this coming. The shift was sudden, and it caught even the most seasoned experts off guard." The market's money spoke louder than Trump's rhetoric, sending a clear signal that actions, not words, drive global finance. A London currency expert called it a game changer for the yen, flipping months of negative sentiment and injecting new optimism into Japan's economic outlook. Investors are now betting on Japan's strength, not its weakness. The narrative has shifted, and confidence is building. An Asian markets analyst in Hong Kong said, "This is a major win for Tokyo. It's a turning point that could reshape regional dynamics." They stood firm, and the market backed them up, rewarding Japan's resolve with renewed investor trust. The result strengthens Prime Minister Kishida's hand in future U.S. negotiations, giving him leverage and credibility on the world stage. It also sends a message to other nations. If your fundamentals are strong, you don't have to bow to Washington. Independence is possible. A former U.S. Treasury official noted, "This is a clear rebuke of the administration's strategy. The market has spoken, and it wasn't in their favor." The market called the president's bluff, exposing the limits of political influence over economic realities. Publicly pressuring allies on financial matters is risky, and today it backfired, creating new challenges for U.S. policymakers. The administration's credibility in financial diplomacy has taken a hit, raising questions about its future approach. When threats are ignored, it's harder to be taken seriously next time. The world is watching how the U.S. responds. The limits of presidential power in a globalized economy are now on display, reminding leaders everywhere that markets have the final say. The world is watching and learning as this episode becomes a case study in global finance and diplomacy. Japan's financial fortress just got stronger, and its position in the global economy has never looked more secure. For Japan, this is more than a financial win. It's a moment of national validation. After years of being labeled stagnant, today's auction proves global investors see Japan as stable and trustworthy. Prime Minister Kishida's position is strengthened, both at home and abroad. Domestically, critics are silenced. Internationally, Japan can now negotiate from a position of strength. The Bank of Japan's unconventional policies are vindicated, giving it more freedom to chart its own course. This could mark a turning point. Japan, once seen as passive, is now a confident economic power. For investors, the message is clear. Japan remains a premier safe haven asset. In a volatile world, stability and predictability are more valuable than ever. Today, Japan didn't just sell bonds, it sold confidence, and the world bought in. As we wrap up, it's clear this bond auction was more than a financial event. It was a geopolitical statement. Financial markets, for now, have proven more powerful than political rhetoric, even from the White House. The Trump administration's strategy of economic pressure has met its limits. If a country's fundamentals are strong, it can withstand even the harshest external threats. This could embolden other nations to push back, leading to a more complex global economic landscape. Investors must now look beyond political headlines to the deeper currents of global capital. Stability and credibility are prized above all else. Today's result is a reminder. The world economy is a dynamic network, not a simple hierarchy. Japan stood its ground, and the world stood with it. In the high-stakes game of international finance, money talks, and tonight, it spoke Japanese.